Welcome back. Now, last week, Sasol reported a massive 44 billion rand loss. The group remains in transition, literally and figuratively, as pressure builds for it to become cleaner and greener. Just what will it take to turn things around? Recently appointed CEO Simon Baloyi joins us now with more. Simon, an absolute pleasure. Good afternoon.
Afternoon, Nolu. Thank you for inviting me.
Thank you for coming, Simon. Lots to chat about today. I want to start off by speaking about taking over as CEO at Sasol. Of course, you've been in the building, you've been in the operations for a very long time, but I do imagine that the view that you have now is a little bit different. And I'm keen to just understand how you have taken stock of the business to date.
Yeah, thank you. I've been at Sasol for more than 2 decades, but of course the CEO role is a completely different viewpoint and vantage point to look at the business. So as I came in, you remember I was announced in November last year and I started in April. So already between November and April, I actually took what you'll call an outsider approach to say if someone were to come in from the outside, what will they see if they look at the organization? And again, I did recommit to myself or reiterated the fantastic people that we have at Sasol, which is a great thing. Then our great asset base, we have a fantastic asset base which spans globally. Of course, the majority of our operations are in Southern Africa, but we do have a fantastic asset, in Lake Charles that we just finished building. I know you're going to ask me about it later. And we've got assets in Europe, Eurasia, China, and fantastic assets in Germany as well, Italy and Slovakia, to mention just a few. So we've got a global business with global assets with a very, very, very strong Southern African footprint. So I saw that. And what makes it extraordinarily special, like I said, is the people of Sasol. With 29,000 people that are fully committed to making sure that we deliver shareholder value.
I want to then speak about, maybe then crafting your own strategy here. You said, looking at the assets, looking at the people. And so that looks like you've got good tools in your goodie bag. But of course, there's then trying to move the business forward. We speak to plenty analysts here on the show, and some have expressed concern about Sasol, its future. Some even saying, Simon, that Sasol could be facing an existential crisis. And so I'm keen to really get your thoughts on that.
Yes, our strategy, we refined it by developing 2 strategic framework or 2 pillars. The first pillar is strengthen and grow, which talks to making sure that we strengthen our foundation businesses. And the second pillar is, of course, the transform that you just spoke to. On the strengthen and grow, we focus on making sure that all our businesses are going to reach full potential. Because, like I said, we've got fantastic businesses, highly cash generative, but those businesses are not yet at full potential. So we will focus in the near term, which is between now and a period of 3 years, to make sure that we can reach full potential of our businesses. And we define that full potential, saying at mining, which is performing at almost 90%. We're producing our own coal, but we're still buying some coal. So we have to really look there where if we can reduce the rand per ton. And that we can do by, either mining all the coal ourselves, or if we procure, we can procure at a price lower than what we mine. But today, our mining assets actually produce the lowest cost of coal. So we have to focus on that. In the Secunda operations, our key focus is on making sure that business returns to full potential. We're running that facility anything between 7 and 7.2 million tons, but it can go to 7.5, 7.6. What's holding it back is the coal quality. We're working very hard on the coal quality. I did mention during the results presentation that we are looking at the destoning project, which is taking the rocks out of the coal to improve the feedstock to Secunda. And if we do that, that will allow us to go back to the 7.5, 7.6. So we're approaching final investment decision later this year. And then hopefully once we implement that project before the end of FY27, we should return that facility to full potential. Internationally, when I spoke about the international chemicals, we said we're focusing on self-help measures there. The key focus is to make sure that we improve the EBITDA margins as compared to our peers. If you look at where we are today, our peers are at mid-teens in terms of EBITDA margins, and we are at the bottom of the pack in single-digit numbers. So we have to implement self-help measures to help us improve our EBITDA margins. And I did commit that at half year when we do the half-year results, we'll come with the targets in terms of what is our target for those businesses. So, and that addresses the first lever, which is to make sure that we strengthen the foundation to allow it to generate the cash that we need to transform, because the cash for transition, we must generate that cash ourselves. The transform lever, we're doing that work. We are hosting a Capital Markets Day between April and May next year, and we're going to share with the market how we see Sasol 2030 plus, what Sasol will become into the future. Yes, you're right. I mean, our company is like this country. It's a coal-based economy. Our company in Southern Africa, it's predominantly coal-based. We mine 40 million tons of coal that we use in our facilities, and those facilities, just the mining only, employs almost 20,000 people. 9,000 our own and others via service providers. So it's a massive coal business that we need to transform. And we use that coal. You remember the coal that we use in Secunda? You can't do anything with it. It's called low-value coal. We actually beneficiate it and make fantastic products from the petrol and the diesel and the ammonia and all the chemicals that you need for the mining industry, chemical industry, and agriculture. So because of the role of this company in the energy system of the country today, it is imperative that we transform it to be part of the sustainable energy system that's busy unfolding in front of our eyes. And that transformation will be very pragmatic and very measured, because you have to make sure that it's about shareholder value, and the money that will generate is shareholders' money. So it's also not transformation at all cost. It's making sure that the transformation projects that we embark on will create value for the shareholders.
Thank you for that picture. I think it's very important to maybe then speak about the balance sheet at this time, because of course you've mentioned the issue of cash there, and of course making sure that your operations to date are as efficient as possible. That feeds into that balance sheet.
Yes.
But there's also quite a bit of debt sitting on that balance sheet. Let's talk about that. And even, as we see financial institutions, financier Simon speaking about, moving away from funding projects that have to do with coal, for instance. What are we anticipating the negotiations will be for that, to keep the cost of capital at a place that is reasonable for Sasol?
Yeah, thanks. The balance sheet is our primary focus area as well, and it's due to what you just said now, that we've seen some financiers, especially from Europe, where they're reluctant to fund a coal business. However, there's still funding streams available in the US and in Japan. You can still fund your business. However, we need to reduce our balance sheet, but it's not going to become a cash balance sheet. My vision is that Sasol will still has debt carrying capacity. If we continue with the fixing of our international businesses, it will have debt carrying capacity. So you'll have some debt that you'll have there. If you then build the transformed business or a sustainable energy business and chemical business in Southern Africa, that will also have debt carrying capacity. However, for the coal business, we need to reduce the debt on that balance sheet. So our focus, we have changed the dividend framework. You remember we changed the dividend framework policy to make sure that our debt is sustainably below $4 billion. So today we're sitting just over $4 billion. So we did skip the final dividend. However, as soon as we return below $4 billion, we will reinstate that dividend. And at $4 billion, if you look at our net debt to EBITDA, we are sitting at 1.5 times. So for others, it's not extremely high number, but for us, it's our risk tolerance, purely because of what you're saying, that future sources of funding might disappear. And you might ask, where are we going with that debt? What does sustainably mean below $4 billion? Our target net debt to EBITDA will be between 0.5 and 1 times, which means our debt on our balance sheet will sit anywhere between $2 and $3 billion. And if we're sitting there, we'll be comfortable, so that we're generating enough money that we can meet our debt and financing obligations.
Let's talk about Lake Charles now. Of course, it was in 2018, 2019. Lake Charles did go over budget. I think it was also lots of delays that marred the project. Then it looked like we had recovered in terms of it, and we were confident in the prospects of the asset. But now we have seen some write-downs emerging from that business. Simon, help us understand what is happening with Lake Charles.
Yeah, on Lake Charles, you remember we took an impairment, and that impairment was quite simply triggered by the value in use, or the book value of the asset versus the value in use. To put it quite simply, it's like you build a house for 10 million and the estate agent comes and he says, no, your house is valued at 6. You have to impair the delta, which is the 4 million. And what they triggered that impairment was the long-term pricing of ethane over ethylene. So the margins that you can get from that project. So we looked at that. We got the assumptions at the end of the financial year. And we looked at the lower for longer. That's what it's called, the lower for longer in terms of the chemical cycles and the pricing recovery. Because of that, we had to make sure the value in use was not matching the book value of the assets. So we did take that impairment to make sure that we can bring those in line. So the asset is still fantastic. It's a great asset. What has happened to it, the fundamentals of that asset have not become worse. The volumes coming out of that asset are still in line with what we expected. You remember we gave a market outlook of what those volumes are going to do, and those markets will follow the volume. And we're also not standing still watching this impairment. We've actually taken actions. We've taken action even before the impairment came in April. We started by making sure we streamline that organization. We're almost done with streamlining the senior layers, and we'll continue to streamline the rest of the organization. We'll remove duplications. We'll make sure we improve the cost position of the asset to help us to move up in the EBITDA margins. We are going to look at the go-to-market strategy of the products that we have. You remember we've got a global asset, and we make similar products across the Atlantic in both Germany and in the Americas. So what we're going to do there is to make sure that we help ourselves to look at it as one integrated asset, and we can maximize the gross margins. Our focus is going to be primarily gross margins over volume. We'll continue doing that. And finally, you asked me about the asset reviews. This is not a disposal to fix our balance sheet. Our dividend policy will help us get the balance sheet where we want it to go. So this asset review is making sure that all the assets in our portfolio perform according to expectations.
Another one that I must ask you about, Chair, is what the large gas users are calling the gas cliff. Here, we know that, of course, we had a 2026, I think, expiration date there, an end date. I think that's been moved to 2027. Yes. But I want to get your thoughts on this one, Simon, and maybe even who the role players are to make sure that we don't get to a gas cliff. I think Sasol, of course, is allowed to say that operationally for us, this is where we stop. But, of course, then there's this huge gap in the market that still needs to be filled.
Yes, for us as Sasol and for myself personally, we take a country view. Okay. That the country does need gas. Gas in the south of Mozambique is finished. We cannot find any more gas. The gas is finished. We have contracts up to 2026. We cannot extend long-term contracts because we don't have gas. You can't sell what you don't have. 100%. But what the country does need is LNG. We think the country needs LNG. The gas master plan that was released by the department, DMRE, but now the Department of Minerals and Resources, that gas master plan also recognizes that the country needs LNG. What we've done, we have tried to extract as much gas as we can to extend the window where this LNG terminal can be constructed so that we don't go into the gas cliff. And you ask about who's the key role players. Of course, Sasol is a key role player because we've been working with gas. We've got the gas. We own part of the gas pipeline from Mozambique to Secunda. We also own the 3-kilometer gas network in the Gauteng region. We've got pipelines that goes between our facilities and Wheatbank. So we've got a network that goes to the customers. So, of course, we have to be part of the discussion. IGUA as well. There's some customers that are part of IGUA. Then there's other customers that are not in IGUA. And I think if you bring LNG, there's going to be new customers as well that can use LNG, and they'll also come on board. So we have to all move in unison. So it's not about one person, it's about all of us. Then, of course, the DMRE or the Mineral and Resources, NAG, and the DTIC, and everyone is involved. And finally, the key person is going to be the regulator, NESA, because LNG, this will be other people's gas. It will be gas from Orex or Qatar. So those, not just Qatar, but maybe them or Exxon, Mobil, whoever is the supplier of LNG. And LNG is an internationally traded commodity. So if this country wants it, we also have to play by the rules of the international market. So we'll help to get that done, because I've heard, it's up to 200,000 people's jobs that could be at risk if there's no gas. So Sasol is concerned about that, and we want to work with everyone to make sure that we can help to bring LNG to the country.
We're out of time. I'm going to give you maybe a quick minute for parting shots. Anything that you think I probably haven't covered in this time that we've had together?
Yes, thinking about our company, I just want to assure you that myself, my leadership team, the 29,000 Sasolites understands what we need to do in the short term, what we're going to do in the long term. We're all committed to be part of the energy evolution in this country. Sasol will be part of the future that is going to be built. We think the country has a fantastic future. I understand today everyone can look at our economy and think it's a coal-based economy, but with clear plans and strategies, we'll all be able to transition it, and Sasol will play a part and a role in that transition.
Well, Simon, thank you for this chat. It's been a pleasure speaking to you.
Thank you
that
so
was
much.
Sasol CEO Simon Baloyi.